Hello and welcome to Kitco Mining's Investment Trends with me, Paul Harris, where today we'll be talking about gold exploration in the Abitibi region in Quebec and Radisson Mining Resources' O'Brien deposit. Radisson Mining Resources trades on the TSXV under the ticker RDS. And joining me today is Director and large shareholder Michael Gentile. Michael, welcome to Kitco.
Great to see you, Paul.
Now, Radisson owns the O'Brien Gold Project in the Bosquet Cadillac mining camp along the Larder Lake Cadillac Break in the Abitibi. That's one of the most famous gold producing districts in the world. And previously it was a high grade mine decades ago, produced for about 30 years. What led Radisson to obtain the project, and what is the opportunity that you saw there?
Yeah, I mean, there's an old adage, Paul, the business, the best place to find high-grade gold or a gold mine is adjacent to or underneath an existing gold mine. So obviously the O'Brien project, as you said, was the highest grade gold producer in the history of Quebec at 15 grams per ton head grade. The mill produced around 560,000 ounces historically from the 1930s to 1950s using, old technology. And it got down to about 1,000 meters at that old deposit. Gold was $35 an ounce at that time, 3.5 per ounce. And they reached the economic limits of the mine, not because there wasn't more gold present in the region, but just because of that depth and that gold price, it didn't make any sense to go further. It basically has never been mined since. Project's been around for a while, but with new geological techniques and new focus, this management team has really driven this project forward and showed there's a lot more to be found as recently as this week, showing some fantastic results. So we've grown the resource, grown the deposit adjacent to and now underneath the old mine, showing this project has significant legs and it's substantially larger than prior belief.
How did the company come to pick up the project?
It's been held in Radisson for many years. I think it's been public for about 20 years. But under the new management team the last several years, renewed focus, better capitalized, stronger management team in place, we've been able to really drive this project forward much more quickly. The big breakthrough, Paul, has been really the deep drilling and the drilling east of the O'Brien mine. Currently we have a resource of about 1.5 million ounces of gold using a 2.2 gram cutoff grade. But the management team believes, and I believe strongly as well, there's 3 to 4 million ounce potential here. So it was always believed as a small kind of high grade jewelry box deposit. But the last 5-7 years, management team has really proven out this is a massive potential deposit, has very contiguous and excellent geology from a drilling standpoint, great hit rates. And so we're having a lot of success fleshing out the resource and also recently putting out some very, very impressive economic parameters on a potential development scenario for this asset.
I want to talk about the preliminary economic assessment that you put out in July in just a moment, but let's stick on the Abitibi. Modern mines in the Abitibi, they go down to depths of 2 kilometers or more. So if historical mining only went down a kilometer, you've potentially got a lot more to come there. And some of the recent drilling you've done, you've put out some core photographs showing a lot of visible gold, alluding to the high grade nature that you mentioned a moment ago of prior mining. Talk to us about some of the high grade gold hits you've been getting.
Yeah, it's a great point, Paul. If you look at the resource we put out, this is March 2023, we put out the resource. So the resource would have had a cutoff date of 2022, December 2022. So we're excluding drilling from 23, 24, and most of 25, almost through 25 now. That's not included in the prior resource. That resource has, as I said, 1.5 million ounces at a cutoff grade of 2.2, and the resource grades around between 9 grams in the indicated category, 4 or 5 grams in the inferred category. If you look at that resource, 75% of that resource, Paul, was above 600 meters or to surface. So you got about, a million ounces or so, or 1.2 million ounces between 600 meters and surface, and only a very small amount of ounces below 600 meters. If you look at our drilling we've recently done, is we drilled at 1,500 meters deep. So 1,000 meters below the old mine, 500 meters below the old mine, about 1,000 meters below the majority of our current resource. And we hit some spectacular grades. We talked about that coarse visible gold, around 90 grams over close to 4 meters at that depth. So when you have 1.5 million ounces basically above 600 meters and you're hitting 90 grams over close to 4 meters at 1,500 meters, you don't have to be a resource geologist to think that this deposit has substantial multiples of its current resource size potential. Another great point you made, Paul, also is many mines in the area, including, LaRonde next door, Westwood, Doyen. Those mines go to 2,000 to 3,000 meters deep. So the geology in this region is very well known to have very contiguous deposit going down for kilometers, thousands of meters of contiguous gold mineralization. So the fact that we're having success at 1,500 meters deep and now drilling even deeper below that should not be a surprise to the geologists in the region. But for whatever reason, this deposit was never really viewed in that way or attacked in that way. And we're breaking this thing, wide open as we speak with this drilling, showing except potential for 3, 4, 5 million ounces of resource in front of us here in terms of more drilling potential.
And Michael, I often see core photographs with visible gold, and it's a speck here, a speck there. But looking at your photograph, you've got a whole crack that's just filled with the stuff. That's obviously very great. I'm surprised you can sit still because that's obviously very exciting. But having a lot of coarse visible gold can make deposits nuggety and hard to mine. Continuity is the question that people talk about. To what extent or not is that an issue here?
Fantastic question. And you nailed it in your question there, Paul. Continuity is key. So some deposits have coarse visible gold, but have either terrible or difficult continuity, which makes it very difficult to mine. I'm not a geologist, Paul. I've been investing in the mining space for 25 plus years. So I love deposits where the geology is very simple and easy for a non-geologist like me to understand. What we have at the O'Brien deposits, yes, we do have coarse visible gold, but we have fantastic continuity. So the gold lenses that we have, these sheets of gold, you think about straight sheets of plywood almost going down for 2 kilometers at a time. It's incredibly predictive. So we have great geology. We understand the rock types that bear the high grade gold, and the gold is excellently placed in the sense it's always in the same place, in the same horizon. So that's how we're able to drill, Paul, a 1,500 meter deep hole, 500 meters below the old mine. If we were less brave, we would have drilled maybe 10 meters below the old mine. But we have such great data at this mine and such great continuity that we were able to stick a hole 500 meters below the old mine. Say that the high grade gold should be in this lens about 20 meters wide on this shear zone here of gold. And we're able to hit it with incredible accuracy. 90% of our holes that we drill, Paul, hit gold, most of them hitting visible gold. And that speaks to the geological understanding and the continuity of the deposits. The continuity is excellent. So that's great from a targeting perspective. It's also great from a mining perspective. When you go to mine that, you're going to have excellent indications of where to put the stopes and how to mine it out. The second point I'd make, Paul, if you look at our drilling, coarse visible gold, yes, sometimes be difficult continuity. In this case, it's not a problem for us, but the coarse visible gold is often underrepresented in assays because sometimes you take a small sample of that core, you may not be getting a true representation of what the resource grade is. And we're quite convinced that the more you drill this deposit, the tighter you drill this deposit, the higher the grade goes. And you can see that in difference between our indicated resource and our inferred resource. So the tighter the spacing that you drill, the more gold that you get. And what also happens in these types of deposits is you have your head grade of 8-9 grams, as they indicated. When you go to mine it, there's often a positive reconciliation. So you have maybe a resource grade of 8 or 9 grams, and maybe you're actually getting 10 grams, 11 grams through the mill. And that's because, again, the coarse gold is underrepresented in the sample you're doing from an assay perspective. You're taking a very small portion of what you're drilling. So what we're doing for that, Paul, is we're doing photon assays. We're piloting a program with photon assays, which gives you a much larger sample size and should give you a more representative grade. We don't know yet how that's going to come back, but my strong sense and geological sense is that this graded deposit should continue to inch up as you drill it more densely, and potentially with photon assays getting you a more representative sample of the project, potentially grade increasing. So we actually view the coarse visible gold in this case as a strong advantage of the deposit.
I mean, given your location, you've got a lot of advantages because you've got a lot of mining operations around you. So you've got good guides as to how to find more gold. Is there any mine in particular that you think is a good analog for O'Brien, apart from obviously the historical O'Brien mine?
Yeah, I would say, Westwood Doyen in terms of geological laid over to size of the deposit's a good one. They've had some ground condition issues there. We don't have that. Our rock conditions are excellent here. Our stability of the mine rock is good, so we don't see issues like that. But that's a good analog in terms of size. The Lapa mine, which went down to multiple kilometers as well next door, is a good analog. But the nice thing, Paul, is the geology is very well known in the region. There's multiple high-grade gold mines across this belt that have very similar geological characteristics, which also makes your targeting and your geological modeling a lot easier. We're also quite advantaged, Paul, in terms of the number of available mills in the campus. It's a prolific mining camp. We have 4 or maybe 5 mills within 75 kilometers of our existing O'Brien deposit that have excess mill capacity. And with the grades that we have at this deposit, the grades coming out of the O'Brien project would instantly be the highest grade mill feed for all these mills in the region. So when you have excess mill capacity in a region and you have the highest grade ore in the region, that puts you in a very strategic and valuable position in terms of strategic value to consolidation in the camp.
Okay, and you've recently sort of looked to uncover and show some of that value. You put out a preliminary economic assessment, a PEA in July, that outlined an 11-year mine life to produce about 70,000 ounces a year from an indicated resource of 2.2 million tons grading 8.2 grams per ton. You talked a little bit about the resource earlier, and in that you said that you used IAMGOLD's Doyon mine as the sort of processing option. The initial capital was 175 million Canadian, all in sustaining cost of $1,059 per ounce. So potentially this mine could throw off a lot of value. Talk to me about the PEA. Why did you sort of choose IAMGOLD's Doyon mine as the processing option there? As you said, you've got 5 other mills that are starving for feed in the region.
Yeah, so first I'll speak to the PEA. So our CEO, Matt Mance, has done a fantastic job. And, institutional investors, financially minded investors like myself, if you're going to build a new gold mine, we're clearly showing the market, Paul, that we have the resource potential to have a standalone operation here. You have 1.5 million ounces already in the resource. We've talked about how we can exponentially grow that over time with more drilling. But when you've got 4 or 5 available mills in the region with excess milling capacity, from an economic perspective, it doesn't make sense to put a new mill in a camp that has 4 mills already that have excess capacity to mill additional ore. So if you owned all the mills, you would never do that. From an economic perspective, you would put that ore through someone else's mill. So that's why we started with the premise of, by using someone else's mill, we can dramatically shave off the capex required to put the mill in place, a tailing facility. So you have a very low capex, very high IRR, quick payback project. Just to give you an idea of how good our PEA was, Paul, at $2,550 gold, $2,550 gold, we have a 48% IRR and a 2-year payback and an NPV to capex ratio of 3-to-1. If you look at the current gold price, around $3,300 per ounce, that IRR goes to 74% and a 1-year payback. These are off the charts, fantastic economic return numbers, especially for a project that has so much upside potential in the geology. So that shows you the power of shared infrastructure and using existing infrastructure in the camp to not have to spend that money for yourselves. So with the Doyen mill, we're very grateful to IAMGOLD. In order to publish a PEA where you're using someone else's mill, you have to sign an MOU or letter of intent with someone to show the market that that mill is potentially amenable to taking your ore. That deal was non-exclusive, so it does not bind us in any way to IAMGOLD, but was mainly for illustrative purposes to show the market and IAMGOLD as well that the potential to take their ore through the mill was real. But this ore would be suitable for many other mills in the region. And it shows you the savings and the synergies you get from using a toll milling or a synergistic combination of the companies. So that's the purpose of the study. It also massively de-risked the metallurgy. There were some comments in the past about Radisson's ore being refractory, and that was completely disproven by the metallurgical work that we've done and the flow sheet we've done for the Doyen mill. We're seeing recoveries in the mid to high 80s, all the way to low 90%, Paul, going through their mill. And we have very similar ore to the Lapa mill as well, Agnico, which sees very strong recoveries as well. So we've also de-risked the metallurgy, the resource, the mining economics of this project. So we've really substantially advanced this project in a meaningful way the last 12 to 18 months.
Well, investors seem to be finally taking notice. Your share price is up about 163% over the past year. Let's talk a bit about company strategy. You're showing that you have a project that you could build and operate profitably, but with a number of bigger players pretty much on your doorstep, I imagine a sale is also up there amongst the strategic possibilities. What is the strategy of Radisson? What is the end game?
Yeah, so I think we've shown the market we have a highly economic and synergistic project for all the major mining companies in the region in terms of the value of the deposit. The strategy of the company, Paul, is quite simple, is advance and de-risk the technical work needed to continue to prove to the companies in the region this is a buildable, kind of build me now type mining project, with the economics that we're showing that definitely is flashing that green light for us. But at the same time, the success we're having with the drill bit and the exploration side of things, the PEA, that numbers we talked about that are so compelling only include, like I said, the 2023 resource. But we're clearly showing the market that this resource potential to be 2, 3, or even 4 times bigger than it's listed today. So we have a very aggressive drill program of about 60,000 meters on the go right now. Drilling costs in the region around between 170 and $200 Canadian per meter. So you get incredible bang for the buck. We have $16 million of cash in the treasury, and we're going to be aggressively drilling this deposit in these deeper targets underneath all the existing mining shoots that we have from east to west, under the old mine, under our new resource that we have to the east and even going further west. So we hope to see continued success. The first 9 holes we put in deeper holes under the old O'Brien mine, Paul, went 9 for 9. Every single hole hit gold, every single hole hit visible gold. So with that kind of hit rate, the market's telling us we want to see you drill more. And if we can put a 3, 4, 5 million ounce number on the board, when the PEA is only including 1.5 million ounces, you're obviously going to see a major uplift in value, mine life, and importance of this project in the global landscape.
What's the magic number there, Michael? What number of ounces do you need before Agnico Eagle gives you a call?
You'd have to ask them that question, Paul, but I would say that I think what we've put, the PEA shows the market that you've got a very economic project now. What we're doing as a company is we don't want to either transact or do a deal in toll milling scenario if you don't know what you have under your feet. So we're aggressively drilling to show the market that we have 3, 4, 5 million ounces of potential of resources here. That obviously dramatically affect the value of the price and dramatically affect the strategic value in any potential transaction in the future. One thing that's important to note, Paul, as well, is on our board, we have Pierre Baudouin as our chairman. We have Peter McPhail. So Pierre Baudouin built the Detour Gold Mine, built La Chispas for a Silvercrest. We have Peter McPhail, former CEO of Alamos Gold, who's built multiple mines in his career. Alamos, one of the most successful Canadian gold companies in all of history. And we have Matt Manson, who's built multiple mines as well as our CEO. So on our board and our management team, we have individuals that have built 9 mines in their careers. Very few junior mining companies have anyone on their board has built more than 1 mine or a 0 in their history. So we've got a team that, if we want to, can take this all the way. So we're not just sitting here like many other junior mining companies waiting for a transaction. We're going to systematically advance, de-risk, and move this project forward. And we have the board and the team, both from a capital perspective and from a technical perspective, to take this project as far as the market wants us to take it. But we do agree there's a lot of strategic value in this asset and potentially would be in a situation where there'd be M&A potentially in the future at some point.
Now, you did the mill testing at Doyon with IAMGOLD, so they've obviously had a good look at the metallurgy. Even closer to is Agnico Eagle Mines with its La Ronde mine. They may both be natural buyers of Radisson, but looking back at recent transactions, whilst there may be obvious strategic fits of one project with a major, that can take a long time to materialize. So the east of you, A3 Mining, for example, was a natural acquisition for Agnico Eagle Mines to join with its Malartic mine, but it took many years for that takeout to come. And I take on board your comments about the mine building experience you have, but I do believe the market gets nervous when junior companies start talking about building a mine. Your CEO, Matt Manson, for example, had a rough experience doing exactly that at Marathon Gold before its shareholders were experienced a take under by Calibri Mining. So I guess the question is, it's a tough balance to continue adding value, but without necessarily spooking the market about what your ultimate intentions are.
Yeah, I mean, as you can see by our study, Paul, our intentions and the economic rationale indicates that you probably don't need to put a new mill here in the region, as I said earlier, right? The key for me, Paul, is if I'm an investor in many junior mining companies, been doing this for 25 years, like I said. If I'm invested in a company where there's only 1 mill in the region and I'm pegging my hopes on a consolidation strategy with that single mill owner, I think you're in a very vulnerable position in that scenario, because that mill owner, that major mining company, can say, I'll buy you when I need to. I'll get around to you when I need you or when I'm ready to do it. What I love about the Radisson situation, Paul, as I said, there's 4 or 5 mills within 75 kilometers of our operation, everyone's owned by a distinct mining company. So you have a natural built-in tension that if all those 4 or 5 mining companies agree this mill feed could be, I don't know what their thoughts are, but I'm saying, in theory, they agree that this is a potential source of feed for their mill. If there's 4 or 5 people looking at you, that clearly puts a lot of tension and pressure on them to act, because if you don't act, you'll lose it. Also, I'd say that the fact that we're growing this deposit to 3, 4, 5 million ounces also speaks to the fact for another company, obviously Canada is a very favorable jurisdiction. Many mining companies want to possibly diversify their jurisdictional risk into tier 1 jurisdictions like Canada. If you can show other major mining companies that maybe not be in the region, that have desire to be in the region, that you have 3, 4, 5 million ounces of resource potential, and the returns are so good, even with a toll mining scenario, that could easily justify a standalone operation. You also introduce the risk of a risk for the local buyers of a new mining company coming in and saying, well, I'd like to lay my flag down in Abitibi as well and own this operation and build my own mill, advance it forward. So whether you're buying a house or any other process, the more tension, the more interested parties you have, the more likely a transaction is to happen, and the better price you're likely to get. So I think we're very well situated with the nature of this camp being so competitive that we think there'll be a natural tension. Whatever scenario we choose, there'll be tension on either side.
Okay. How do you get a transaction to occur? You're doing 50, 60,000 meters drilling. You've got 16 million Canadian in cash. You're going to get O'Brien up to sort of 3 to 5 million. What happens then? Because there's always things you can do to de-risk, but that involves raising more capital, dilution. So once you've completed this 50, 60,000 meters, updated the resource to 3 to 5 million, is that a moment in time when the sensible thing to do is to perhaps run a formal process with these, companies that are in the region and companies potentially that want to get in the region and say, look, this is as far as we're taking it. Now it's time for you to put up or shut up.
Yeah, I mean, I think it's hard to say how the timing of those processes go, Paul. I would say that we're seeing so much success with the drill bit that it makes a lot of sense for us with our drill costs being so low and the value we can add with every single meter that we drill, that drilling this deposit aggressively is absolutely the right strategy for shareholders. It's been absolutely the right strategy to de-risk all the technical factors, the metallurgy, the mining methods, the flow sheets that you need to build a potential mine to show investors and other corporates that this is a highly attractive project. So we're going to continue to advance the value of this project, both by drilling it and de-risking it technically. I think the high gold price environment they're in, Paul, we saw Newmont put the results out last week, record cash flow, record share buybacks, record margins. That only helps. M&A transactions are helped by the market environment they're in as well. So when companies are generating record profits and record cash flow, they have more propensity and ability to pay better prices for acquisitions. But I don't want your viewers to get the wrong idea. Our strategy is not to sit here and wait for a takeover. Our strategy is to add as much value as we can every single day. You mentioned I'm a very, very large shareholder, Paul. So really what I focus on every single day is how are we adding value to the share price? Is every dollar we're spending accretive to shareholders and adding substantial value? And we're going to continue to do that. And luckily for us, we have a project that every dollar we spend is adding substantial ROI and ROE for shareholders in terms of return to their investment.
Excellent. Well, let's end, Michael. What are some of the key catalysts we can expect to see from Radisson over the next 12 to 18 months?
Yeah, as I mentioned, we've got a very busy drill program, Paul. We'll be going to 4 rigs shortly on the project, 60,000 meters of drilling. So we expect to see a very full calendar of drill results on a monthly basis coming out of this project. And these are not infill holes. These are not, marginal step outs. These are very important holes we'll be drilling to hopefully massively increase the footprint of this deposit. So I think the drill results is a major catalyst. We're also going to be making increased efforts to market the story institutionally. We're extremely well-owned company by a lot of high net worth shareholders, including myself, that have been supporting the company for the last several years. But this is a story that's under-owned institutionally. And now all the progress we've made on our PEA, on the resource drilling and the de-risking of this project, we think it's an ideal time to really introduce the story to a larger institutional audience. So we'll be very busy marketing in the fall to institutional investors and expect to see the increased ownership of the company on an institutional basis go up from that after that process is completed.
Well, I wish you the best of luck with that, and I look forward to seeing the drill results as and when they come out. Michael Gentile, thank you very much for joining us today.
Thank you, Paul.
And once again, Radisson Mining Resources trades on the TSXV under the ticker RDS. We have a lot more investment trends videos to come, so hit that subscribe button. I am Paul Harris, and this is Kitco Mining.